Welcome back. You're watching Earnings Edge. Bharat Forge is the first company we are focusing on. The company announced its earnings and while the revenue and margins grew substantially, the profits were down by over 18%. This was on back of one-time provision of 150 crores the company made for one of its investments. To talk more about those numbers and what lies ahead in FY25, joining me today is Amit Kalyani, Joint Managing Director at Bharat Forge. Hi Amit, good morning. Thanks a ton for joining in. Amit, it's been a good quarter. You've seen a growth on most parameters, one-time provision that's impacted profitability. But let's talk about top line. Defense is the key growth driver for your company, currently contributes 15% to your top line. Tell us where you see that and how you see that play out for the rest of the financial year.
So, as we mentioned, our defense business started generating revenues 2 years ago. It was about 500-600 crores in that year. Then it grew to above 1,000 crores in the last year. This year, again, it will grow in the vicinity of 2,000 odd crores, maybe slightly plus minus. And our goal is that in the next 3 to 4 years, we should again keep growing it manifold, so possibly double or more in that time. And quite frankly, we are very bullish on these prospects because we are seeing tremendous traction from global markets, and it's not just India that is going to be our market. As it is today, over 90% of our business is exports, and I think the products that we have developed and whose IP is completely owned by us, and we do everything vertically in-house, give us the capability to service large global markets with high value and significantly value added products at an extremely competitive price and gain a large market share. So I think the potential is large, and we hope that this business will keep growing.
Exciting. 90% of your revenues come from outside. So tell me, where do you see and how much do you see exports of defense grow by in this financial year and over the next 2 to 3 years?
See, as we've mentioned, we have an order book of about 5,800 crores roughly, which is all exports. And in addition to that, we have large domestic programs, which will now, the tendering is all over and the price bids will be opened. And there are 2, 3 other new big programs in India. So products that are being developed with a global view, but to keep the Indian requirement in mind as well. So, as I said, these are high value added products, and they are global in nature. So we expect to see large opportunities unlocking from this.
Talking about opportunities, we believe AT-AG is the next big opportunity for Bharat Forge. You want to tell us what is the size of the market, what is the sort of market share you're working with and expecting, and where do you see that, and how much do you see that contribute to your top line over the next 2 to 3 years?
See, we have 7 gun platforms in all, artillery gun platforms, with several different variants of each. So all put together, we can mix and match and make many more variants. So these variants are from 105, 155, right from 39 cal to 52 cal, and potentially go beyond that in the future. We have mounted guns, we have towed guns, and we have self-propelled guns. So a combination of these, the requirement just for India itself is 4,000 numbers, and globally will be significantly in excess of this. So I think the opportunity is very large, and we will pursue this business. The other thing that we're doing is also building up a revenue business in the defense space, which is spares and consumables, which itself will become a significant business in the next 2 to 3 years.
Right. You want to tell me if you've got any local competition in the ATAC space?
Well, of course, there's a second development partner, which is the Tata Group,
Okay.
which has also worked in co-development of, which is also the co-manufacturing partner of the ATAX gun. So these are but their product overlap we have there is the ATAX gun.
Right. Let's talk about the overseas subsidiary because that still remains in a loss. What is the outlook there, Amit?
So as we've mentioned in the past, we're working towards a path to profitability, and we're quite confident that by Q4 we should be at above break even. Unfortunately, the volumes have been a little weaker than anticipated because of issues ranging from the Red Sea crisis and overall demand reduction in Europe a little bit, to one of our customers having a specific issue in the US market, which has reduced our offtake temporarily. It's not anything to do with us. It's something to do with some other supply chain issues they're facing.
And Amit, there's that 150 odd crores or that one-time provision on investment in Torque Motors. You want to tell us what this is on back of and shed some more light on that for our viewers?
So
and
very
investors?
simply,
Yeah.
yes, very simply, we are an investor in a company called Torque Motors. It was founded by a bright young man from Pune, and we invested in this company over the last 4 to 5 years in multiple tranches. And then with the withdrawal and the reduction in the FAME scheme, the profitability of the company reduced. And I think it's prudent for us to take a provision because we are, as I said, we are an investor. If the company is in a situation where we have concerns over its going concernability, we have to recognize that and take a write down. We don't run the company; it's run by its CEO and managing director and the KMPs, and that is the decision that has been taken. So that's what we have done.
Right. So fair for me to understand that this is just an investment that's gone bad, and the 150 crores represents the complete investment made by your company in this company.
Yes,
or there could be some
absolutely.
more we'll see in the next few quarters.
No, we have written off all our investment in this company so far,
Okay.
and
Amit,
obviously, we're working towards working with them to see how we do a orderly wind down. But as far as our investment is concerned, this is the large part of it. As you mentioned, there may be some remnants, but this is a large part of it.
right,
Very, very significant,
and
90%.
no write backs can be expected either, right, Amit, going ahead?
Well, never say never, but I don't foresee that
Yeah,
right
so
now.
prudent to write it off as a provision, and then of course what happens later is always a cherry on the top. Very ambitious fundraising plans, 2,000 odd crores, which has been approved by the board. You already big time on the export map. So make in India, sell outside, make in India, sell more in India. What is this 2,000 crores going to be used for?
So it's very simple. We see tremendous opportunities in several of the business sectors that we are present in. As you're aware, we acquired a business in Coimbatore called JS Auto, and then we acquired a second one called IM Indo Shell Manufacturing. And these are both foundries in the iron and steel space. And we are seeing tremendous growth opportunities in this sector. When we bought the company, it was about 450 crores in sales. I think just in the 1.5 years since we bought it, or 2 years since we bought it, we will almost grow it by 60 to 70%. And the future growth rate looks very promising. And we want to be able to both do capex in these areas where we need to build capacities to service the market, and there are certain other areas where we will target inorganic growth, but in India. So by acquiring assets or businesses in India to service both the growing demand in India and to export from India.
Amit, also I believe the company is working on cost optimization, and that's quite the focus for Bharat Forge. Is it a fair expectation for us that profitability then in that case will only improve, and there's a very clear upside risk to that in the next couple of quarters?
So look, if I put it in a different way, what we're doing is bringing down our break-even level, improving our product mix, increasing the product diversity and customer geography, and de-risking the business further.
De-risking the business further. And when do you think we can see that reflecting on your earnings or your margins or your EBITDA?
Well, if you look at this quarter also, our EBITDA margins were
improved.
extremely strong.
Yeah.
They were 28% plus. So it's clearly reflecting, and it will continue to do so as long as the revenues remain at this level or so. But we still continue to do some cost reduction, business optimization, and the use of digital technology to reduce cost and to improve productivity significantly.
That's amazing, because that's what we've been all talking about, right? It's AI to improve and enhance efficiency, and that's got to reflect on the numbers eventually, which in your case is already showing. Now, one spoiler, Amit, is the CV demand in Europe, right? Which was rather a stable, good quarter for Bharat Forge, but CV is still struggling. Do you feel like this is probably the end of the pain for the CV sector, and going ahead, gradual recovery is underway or could potentially be underway?
So, two of our large customers have projected a good year for next year. And on top of that, we believe that there will be market share gains as well, because uh, you know in Europe, the energy issue, the availability of raw materials are all playing on the supply chain. So if you have a high quality product, good customer attraction and intimacy, there is potential to grow your business. So I think that on an overall basis, even expecting numbers to be stable in Europe, we should expect some amount of growth. And what we're also doing is, for existing product segments and markets, we're also developing a business through our casting business, which is the ferrous foundry, and trying to grow our engagement and share of wallet of our customers. So that itself is giving a huge opportunity.
Right, Amit. Happy to hear. Good luck and
Thank you
congratulations.
so
It's
much.
been a fantastic quarter. We hope you continue to do really, really well. But thanks for joining us.
Thank you. Pleasure.
Well, that was Amit Kalyani breaking it down for us. Bharat Forge has had a good run this quarter. They've seen an improvement operationally on most fronts. They've done a write-down of about 150 crores, which is a provision that they've made for an investment in Torque Motors, which, of course, they were not running, but it was largely an investment, and that has gone bad. Well, that was Bharat Forge, and that's the stock at the day's high point, trading with a gain of nearly 3%. Well, let's move on from one company to another. The other one that we're talking to is going to be the management of Concor right after this break. So stay tuned. We'll come right back.